Good morning, everyone. The dollar is opening mixed in Europe. It's gaining against the British pound and the Norwegian krone, and lower against the Swiss franc, the Swedish krona, the yen, and especially the New Zealand dollar. The main currency pairs remain relatively trendless. Our technical assessment, for example, gives no sense of direction for euro-dollar, for the cable, or for euro-yen. It seems there's probably more to go for in the emerging markets than in the G10 at this point, as emerging market currencies are more volatile, but not necessarily more predictable. One currency that is trending is the New Zealand dollar. The Reserve Bank of New Zealand raised its official cash rate to 3% from 2.75 overnight. The move was totally expected and surprised no one. What may have surprised people, however, was how bullish the Reserve Bank is on the economy and how it raised its assessment of the inflation risk. At the same time, Governor Wheeler expressed some concern about the strength of the New Zealand dollar. He repeated the statement from the previous meeting that the rise in the cash rate, quote, will depend on economic data and our continuing assessment of emerging inflationary pressures. But he added the new phrase, including the extent to which the high exchange rate leads to lower inflationary pressure. So they may limit the rise in rates if the exchange rate gets too strong. The New Zealand dollar gained on the news, and I'd expect it to continue to rally as the only G10 currency whose central bank has taken such an overtly hawkish view. Yesterday's new home sales in the U.S. Shocked the market, falling to a 384,000 annual pace from 440 in February. The news caused investors to reassess the outlook for Fed policy, and implied interest rates on Fed funds futures came down by 4 basis points in the long end. However, one reason for weak sales may be that there just aren't that many new houses to sell. So this indicator may be less relevant to economic policy than it used to be, in my opinion. During the European day today, the main indicator will be Germany's IFO indices, which once again are expected to be mixed. The current assessment is expected to be higher, but the expectation index is expected to be lower. So it remains to be seen which one the market puts more emphasis on. Often it's the expectations index, and the euro would fall on the news. 3 members of the ECB Council, including President Draghi, are speaking today. From the US, we have durable goods orders for March. The headline number should be a bit below February's rise, but durable goods orders ex-transportation orders, which is also closely watched, is forecast to be much higher than in February. Initial jobless claims are expected to leave the 4-week moving average unchanged and so be neutral. So, therefore, on balance, the U.S. economic news should be dollar positive, and I look forward to a stronger dollar during the day. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, Global Head of FX Strategy at IronFX Global, wishing you solid trading.